Hello everyone, today I'll be covering my indices trade that I took early in the morning. Today I'll be breaking it down from the daily chart all the way down to the 1 minute entry. Here are my executions. And without further ado, let's get started. So first on the daily chart, we want to mark out the weekly opening price and observe how the previous days are trading relative to it. Are we forming manipulations on above it or below it? And that'll really gauge how the weekly candle will develop. So we see Monday right here. We form up, run out previous day high, not really much of a reversal, but it is enough for a retracement into our key level, which is this internal gap. And we have it on ES and NQ. And the reason we expect this key level to hold is because the overall narrative is bullish as per this daily time frame SMT right here with this low. This is what broke us out of this consolidation with ES running the low and NQ failing to do so, making a fair swing. So that's the first component as to why we should see this gap hold on the daily time frame and why we should expect this to be a retracement instead of a reversal. So after we've run out previous day high on Monday, which would be Friday's high, we trade back into the internal gap after having reason to do so. And this sets up the narrative to expand higher on Wednesday, which is today. So once we close on Tuesday, we can see we once run into the gap and we create a swing formation or the C2 of the swing point. We can see we close back in the range nicely above Monday's low right here. And on anticipation, we should expect C3 to expand higher. What can we target? This high right here. So before the day opens, or when the day opens, we can mark out the 18 opening price, Wednesday right here. And the same for NQ. Now dropping down to the 4-hour chart, there looks like a lot here, but I'm going to break every single line down for you. So these two opening prices, Wednesday, are on both days, but they are for different functions. The 18 opening price on Wednesday is the daily candles open. It is the price level that you saw on the daily chart. That candlestick open is right here. Everything is fractal and we can view it on a lower time frame to get a more clear picture on how price reacts to it. So here we have that daily internal gap on ES and NQ that formed after expansion away from the SMT on the daily chart. Now, before the 18 o'clock open on Wednesday, before the daily candle opened, we can see there was SMT within this gap on the 4-hour chart with the previous week Friday low and Tuesday right here. Originally, this is in regular SMT, but since YM created equal lows, technically it's off by a few points. If I create my magnet mouse right here and I drag it onto this low, you can see it slightly curves up. Now, how can you confirm SMT like this? Well, you can use the bodies. So we can see in this swing manipulation right here, where we thought it had ran low, we can confirm that the bodies, the closures within this close and this close, and the respective close on here and here, we can see that there is a closure divergence as well. So this confirms SMT when you are in a iffy scenario, when there's equal highs or lows formed from SMT and it's off by a few points. As you see, it angles slightly up. You can barely tell if it's SMT. This is one way to confirm the SMT is with body SMT. So once that forms, we expand higher in the previous day on Tuesday. This is what created that swing C2 formation on the daily chart. We closed right here on ES. And when Wednesday opens, we expand immediately higher as a continuation from this SMT. See on YM, we also expand higher overnight So going to 6 a.m., we run out this relevant low on the daily chart. This was that Monday high. And this gave us the reason to retrace again. Again, this is all fractal. When we run out a relevant level, we can either expect a retracement or a reversal of some form if there is no other objectives. But in this case, our objective was this internal range right here. This is our key level for longs. Now, this 4-hour gap was created in the overnight session after the daily open. This is really important because if price were to continue higher, this level must hold. This is the level created from the expansion overnight. So if price were to continue higher, we should hold it. And we can see ES failing to reach in the daily open right here. While NASDAQ opens here, we trade through it on the 6 a.m. candle and we opened below it. This is a sign that ES is currently the middle asset, YM is the strongest, and NQ is the weakest for upside. Now, why is ES the middle asset? Well, if we take a look at YM, we can see the exact same gap created on ES was never traded to on YM. See, this gap was left unfilled right here. And we are further away from this gap than ES was at the time of the 10 a.m. open. Now, if we break it down to the 15-minute chart, this whole 9 a.m. candle right here is encapsulated in this gray shaded box. The opening price right here, 9 a.m. We close 9:45 right here, and 10 a.m. opens right here. Now, this candle is inside of the 6 a.m. candle, and the 10 a.m. candle opens right here. I want you all to pay attention to that because this price action right here is all fractal. On the hourly chart, this 9 a.m. candle opened, high, low, closed. Now the only point for a reversal would be now at 10 a.m. because this is the new 4-hour candle right here. See, we wouldn't try to long an expansion candle that's already down here because that wouldn't fit an expansion candle of a small wick. And if we were to trade back up, this would create a large wick, and we don't want any of that. So when 10 a.m. opens, this gives us a new opportunity, both on the 4-hour and 1-hour chart, to look for a reversal. And since we traded into this key level right here, time is now aligned with price. See, price traded into this gap, 10 a.m. opens, and we form a SMT inside of a gap right here. You see that ES ran the low and we closed back in the range, and Q closed through the range entirely, this low right here, and YM failed to even run the low, which supports our narrative found on the higher time frames where YM is the strongest because we never traded into the internal gap, and Q is the weakest because it traded through the daily open, and ES is the middle asset because we traded into the gap but we failed to run the daily open. So in this scenario, I chose to trade the middle asset because it's not the complete weakest, but YM, there was no real place for me to put my stop loss. If I were to enter on the 10 a.m. candle, my stop would go down here. On ES, the swing formation gave me a place to put my stop loss. So looking at the entry on the 1 minute, we go from a 15-minute chart, in this case a 15-minute swing point formation. We anticipate 15-minute swing points with the 1 minute chart as per the fractal model. It would be vice versa if you're looking at the hourly chart. If you're looking at the hourly chart swing points, you would be looking at a 5-minute entry. So here we have an internal 4-hour gap right here. Once we trade into that, this gray box right here is the 9 a.m. candle from open, high, low to close right here. So when the 10 a.m. candle opens, which is this down close candle right here, we create an SMT with YM right here, and we immediately pop back up and creating a change in state of delivery. Since we anticipate this to be the low of the 10 a.m. candle because we're inside of a gap, there is an SMT divergence, the narrative is bullish. The only other time we could reverse is now, because 9 a.m. failed to do so the morning session. So the next 4-hour candle can be used because we have now a small wick in play. And once we close above this, I entered on this candle right here, and you would target the AM highs, and I do think we'd run higher later on in the session, but once we hit our objectives, that's none of our business. And this trade resulted in about 7.45R. So yeah, that was my trade. Hope you all enjoyed. Let me know if you found this insightful. I will see you next time.